Insurance coverage. When it comes to updating your insurance coverage for emergency preparedness, you may be further along than you think. If you have investors or have ever borrowed from a bank for your business, it is likely they require that you have insurance on your business. In this video, we'll first talk about the different types of insurance your business needs before an emergency hits. And then, we'll talk about how you go about getting the best deal from the best agent and the best company. So, you may have insurance against disaster already. Here's why. When you leased or bought your business automobile or truck, the bank insisted on business automobile insurance. When you borrowed money at your rented location, the bank asked you to get renter's insurance for the location and for your furniture, fixture, and equipment. When you got a loan against the building your business owns, the bank asked you to purchase commercial property insurance. These insurance policies that your business may already have due already protect you, in part, against natural disasters. You may already be familiar with and have policies in place for auto, renters, or commercial property insurance. What other types of insurance do you need in order to keep your business safe from disaster? For starters, if you have a brick and mortar building for your business, be sure to thoroughly review your commercial property insurance to understand what kind of damages it covers. Depending on the location of your business, certain natural disasters may be more prevalent than others. For example, if hurricanes are common in your region, your commercial property insurance may include hurricane damage but no flood damage, in which case you would also need a commercial flood insurance policy as an add-on. There's also a thing called business interruption coverage, so that even if you recover from the damages to your property after a natural disaster, it may take you a while before you are fully back in business. This specific type of insurance helps cover loss of income to the business during that downtime. Workers' compensation is an important one. It pays out in the case of injury or death on the job and protects your business from catastrophic events. In many states, this is required after you reach a certain size with a certain number of employees. You're also going to want to have liability policies in place. That's to protect you in case a customer or visitor claims injury or property damage at your business. Few businesses, and certainly no small businesses, have enough resources to fight a lawsuit without liability insurance. If you take out a business loan or if you have outside investors, your bank may also require you, as the owner, to purchase Key Man Life Insurance. This protects the bank in case something happens to you in a disaster or otherwise. Losing a business owner, operator, entrepreneur is typically very disruptive to small business continuity. As a key man or key woman, it's reasonable that the bank or investors would want to have some cushion if something happens to you. Finally, your business may need something called umbrella liability insurance. That's kind of a catch-all type of insurance to provide more protection above what you already get from your existing policies. In a disaster, losses and risks pile up. In other words, with disasters, when it rains, it pours. That's when you need the umbrella. That prevents your liabilities from getting out of hand and washing away your business. Types of insurance. So you can see there's a lot to keep track of. To fully protect your business from emergencies, you will need a combination of plans. Commercial automobile insurance, renters or property insurance, workers' compensation, and umbrella liability insurance all matter. And there may be more types of insurance. If you have a retail business, you may insure against theft by visitors to your store. If you have a transportation business, you may have to insure the goods you're moving so that the sender or receiver is protected against losses along the way. As your business grows, it becomes more and more likely you will turn to a professional to package up different types of insurance, as well as to explain the ins and outs of your insurance needs. 3 key words. There are 3 key words to remember about insurance, against disaster, or just in general, when you're in the market to buy. The premium, the coverage, and the deductible. The premium is the amount you pay, typically either monthly or annually, to cover against a bad disaster happening. Since we like to pay the least amount for products like insurance, you'll want to shop for the lowest premium possible while still getting sufficient coverage. The coverage is how much overall, if a bad event happens, the insurance company will compensate your business. Sometimes this coverage is per incident or per property or per person affected. Your workers' compensation policy, for example, might have a maximum coverage amount per worker, and then it might have a maximum in case multiple workers were affected in the same incident or in the same year. If the losses are more than the coverage amount, then the insurance company has generally capped how much they will pay out in total. You should expect that the larger your coverage for any insurance policy, the larger your premiums will be. The last key insurance word is deductible. The deductible is the amount your business remains on the hook for in case the unexpected bad event happens. A high deductible will save you money on your monthly or annual premium. On the other hand, a very high deductible means your business will have uncovered losses in the event of a bad event. You have to know your financial situation well and how you will react in the event of a bad event in order to choose the right deductible. Choose too high a deductible, your business may be taking on too much risk. Choose too low a deductible, and your premiums may be quite expensive. It's a balancing act. Best deal. So how do you get the best rates on your business insurance? There are two things to keep in mind. First, competition is your friend. And second, choose your insurance provider wisely. And if possible, slowly. Here's what we mean by competition is your friend. Contact more than one provider. Ideally, let's say 3, and let each provider know this is a competitive bid. It's not reasonable to expect, with all the complicated things you have to understand about running your business, that you can become an expert in all the different types of insurance that affect your business. Who's got time for that? You've got a business to run. You can become comfortable, however, that if you've interviewed 3 different providers, that the one you choose has taken the time to know your business, and they've taken care to get you the most competitive rates. That's probably the best you can hope for. Here's what we mean by going slowly. You don't have to go with the first person who asks for your insurance business. There's a market out there. Think long term. Choose wisely and slowly if possible. If you put more than one provider in competition with the other, you greatly increase the chance that you'll get the best rates. Also, if you've already had insurance in place for a few years, and even if you like your current providers, it's not a bad idea to ask a few other companies to bid for your business every couple of years. If your business has a track record of incurring no worker compensation claims, or if you have no commercial auto claims, for example, you could expect your rates to improve over time, all else being equal. If disaster strikes your business location or your people, you are covered by these policies. They are the first lifeline to getting back on your feet in an emergency. And if it doesn't strike, hopefully you'll have paid the least amount possible to protect yourself.